All right, guys, welcome back to the channel. Thank you so much for coming back. A lot of things happened over the last couple of days. I was not able to post a video yesterday just because YouTube was having issues. I don't know what was up with that, but it just kept saying error, cannot upload. So, anyway, I'm trying to do it all over today, so we'll see how it goes. But as far as what's going on with Japan's 10-year yield curve, so we all know how they artificially control the 10-year yield curve. What's going on with it? It used to be in the negatives, as you can see here. They had negative rates for quite a while. It's only up until recently that they try to use money to pretty much artificially control it. So whenever they do adjustments, it's not really an adjustment. To me, the way that I interpret it is something breaks to where they have to, no matter what, artificially try and control it. And the way that they do that is, think about it like this. If you have an artificially controlled yield curve, the way that you keep it controlled and maintained at a certain rate is you have to print money. Money for that would not be in the billions, tens of billions, would not be in the hundreds of billions. It would more than likely be in the trillions just because of the value and all that. So, what's going to happen is just like every single time that they try and it comes back and it fails, and then they have to try it again all over and over, and every single time it leads to the same thing. So, more than likely, we are going to see a slight weakening here. It is going to maybe start to sell off little by little. How far it goes, it might be around this level where it stabilizes and then eventually starts to sell off again. But what we are going to end up seeing is some sort of weakness. It may take a couple times to try and do that. And with that, I mean just like maybe a few months, just because we are on a daily chart. All of this doesn't take overnight to happen. But if you can see, if you can pretty much correlate it with the rest of the market, always blasts off, comes back down, finds a stable area, blasts off, comes back down, finds a stable area. It doesn't really want to like leave this, but since they are trying to control it and put it at a higher level above neutral, which would be zero, just expect a lot of volatility coming up actually. Because think about it like this: if this is the safe haven and they're artificially pumping it up, it costs money to do that, money that they can't just continue printing on forever. So if they can't continue printing on forever, eventually it is going to stabilize, come back, and retrace. When that retracement happens, when it starts to happen, at least the bulk of it, it's going to put buying pressure on the DXY because the yen is going to start to go ahead and go up. So think about it inversely. If it costs yen to go up and that devalues the yen, right now that puts buying pressure on the DXY. But the opposite can happen too. So if you can see here, the moment that the 10-year exploded, the yen dropped. It's only now that it's starting to find support a little bit right here. But the moment that that starts to inverse, you'll see the yen rocket. DXY will sell off a little bit, and then when the yen comes back, you'll see the DXY rocket. That's what I was trying to mean. And so what that'll do is that'll put further selling pressure on the market, just because at this point, in my opinion, everybody says that the waters are murky just because of what Japan's doing with the yield curve control. I actually think the opposite of that. I think it made it a lot easier to see if you understand what the 10-year yield curve does. So what we are pretty much looking for is within a month to 2 months time frame, we are going to see a massive sell-off. I don't know how deep we're going to go. I don't think we're going to go ahead and like capitulate all the way to what people are expecting, because from my experience, the market likes to go ahead and mess with people two ways, the shorts and longs, because that's how they're able to get the most money out of the market, because they're market makers, remember? So what we're going to more than likely see is some sort of bam, bam, bam. So as far as how that'll affect the S&P, the S&P right now, if you look at it, it's coming back and finding, trying to test this and break resistance, but more than likely it's going to get slapped. We already know how this looks. We've been here 1,000 times. So just like how I drew two possibilities, we'd either break that support, come back and get slapped, or we'd go up here and then just immediately get slapped down. So I don't believe that we're going to be able to bust through here. I believe that we might see some sort of retracement, then followed by a second test to this line. But this line at that point will be somewhere over here, and that's where we'll probably get smacked. And then at that point, we'll further capitulate down here to these levels. What I think is going to happen is we'll bust through something like this. Since this is already playing out, I'll draw the bottom part. I think we may get something like this. And we'll see how, or this part further extends and then comes back down. So however it wants to follow, it is seeming to want to do it faster instead of just little by little, which is great for us because the opportunity comes faster. Here on the MACD, you can see that it rolled over. It didn't go as extreme as I thought it would, but it did play out perfectly here. It did roll over. It is starting to show a little less selling pressure, but don't be caught off guard. It might get another leg up just because, look at this. Look how many humps this had. So I call them humps, but at the end of the day, we're just in negative territory here on the MACD. Lots of selling pressure going on. But as far as here, that's where the retracement, this is what I'm looking at. This is how I see us coming into that soft landing, but I don't believe we are going to get a soft landing. I think it's going to be temporarily a thing until next year. Next year is going to be the big one, but it is sped up a lot closer, a lot sooner rather than later, just because if you know what this does, this is the yen. If you know what the yield curve means and how it impacts everything else, you know that now the crash has been sped up from 6 to 8 months to maybe 2 to 3. So be very, very careful because it is imminent, it is looming ahead, and it is pretty much playing out exactly how we thought it would be playing out here. Give me 1 second. If you can see here, this is what we thought with the with Bitcoin. And however the noise decides to play out, it is eventually going to capitulate down here because we're not getting above the resistance here. And if you can't bust through, you get busted down, and that's the support right here. So more than likely, we'll come back, break support. If not, it'll come around here. It always likes to not touch lines. It goes 80%, if not over 80%, like 120, and then comes back up to the 80% for the bounce and retracement. So however it wants to play out, just be patient. Let it do its thing. Don't try and guess it. And let's see. Yeah, see, this is the multi-year level of support that I've been talking about. This is where I think we'll bounce off of. And it looks like it's starting to play out perfectly in line with everything that I've been showing you today. One of the other things that we want to look at is see how that could play out to one of our favorite tokens here, just because it is one of the wildest ones for games. I love this one. So if Sheep just decides to go ahead and come back, test support, that will be around 7.4, 7.5, and then we may get a bounce, maybe up here, followed by a further capitulation somewhere in these levels. But I believe that'll be it just because that's the last year's lows. And we have so many more wallets, so much more money in this coin. I think when I originally got in, it was like around 1 billion market cap. And the levels were like way over here. So even though I don't think that we're done just yet with the lows on here, it'll be some time, but just let things play out. The VIX is being very cheeky right now. So this is the support that we usually follow. This is the outlier. You can see how every now and then it comes back and it breaks out of it temporarily, and then it further like pretty much rockets up into massive volatility. The higher the VIX, the lower the stock market. So right here, you can see that if we do get a short-term pump, it is going to be followed by a hardcore sell-off, and that is probably going to end up happening next week, if not the first week of January. So be very, very careful with that. You can see on the MACD that we already came back looking for support. We are finding support right here. Now we just got to go play through with it. And when that happens, we'll get that second hump over here on the bullish MACD. That's the bullish divergence here. So when that happens, you can see another run on the market. The market will drop another leg. It's just a matter of time waiting for when that happens. And as far as, let me see how the NASDAQ is doing. Yeah, it found support. More than likely, it's going to come back and test this. There's resistance. See how that holds. And yeah, just don't get caught off guard. As far as oil too, oil looks like it's playing out perfectly like how we thought. I had made a video a couple days ago when the US had barely, or not the US, the EU had implemented the price cap on oil, on Russian oil. As you can see here, the moment that same week that that happened, look how oil started to go up. This is not done. People think it's done. It's not done. When you restrict oil flow, that's energy. Energy increases when you have less of it, right? Think of it as supply demand. If you can't get it as easily, the demand of it will go up. The price of it will go up. If they put price caps on it, they're just going to find third-party buyers that sell it over and over and over and bid the price up, if not to what it was, times two from what it was. So just be very careful with that. This more than likely is going to keep going up. It is being very settled, but it's still following that support. I do believe it is going to start making more aggressive moves. We may see something over here before the year ends. Be very careful with oil, just because if oil goes up, inflation goes up again. So that'll be a huge slap. And that's why everybody's pretty much being careful with the Fed, because if the Fed is forced to eventually keep hiking rates to combat inflation, he is going to have to push those things up to at least what inflation is. And right now, what that's 7-8% that they say, but realistically, it's double. So if they really want to control inflation, they'll have to pump it up hard. And so that's what we're looking out for, because energy does have a huge factor in inflation and pretty much how the stock market performs. And yeah, if you guys have any questions, especially with the Japanese 10-year yield curve, let me know in the comments, because it's fairly simple. It's you print money to get it to a certain place, but you can't print money forever. Otherwise, you ruin things. You ruin your own economy. You go broke, essentially. So this will eventually retrace. When it retraces, it will go ahead and pretty much cause massive volatility all over the place. So just be careful with that. If you guys have any questions, again, let me know. Besides that, have yourself an amazing day trading. Good luck.